Hey everybody, it's Vishal of Vidona Residential, and I am happy to bring to you our 2020 year-end market insights for the areas that we cover in the Baltimore metro and DC metro areas. It was a really odd year for real estate, so let's just dive right into it. Okay. So before we get too in depth on the details of everything, I want to give you some insights on the overall economy because specifically the jobs are going to be telling us a story. And when we take a look at the jobs, you can see that there are huge losses in jobs that have yet to be made up and likely aren't going to be made up until enough vaccines have been administered. Most jobs that were lost, though, these are not typical homeowners. They're people that are working like in the hospitality, restaurant business, or hourly employees. Ultimately, government intervention is needed to sustain these workers in those affected industries. And that will help us to avoid a domino effect of losses, job losses, because the higher on the totem pole that the job losses go, the more likely you are going to see an impact on the real estate market. If we take a look at the breakdown of job losses and recovery based on earnings, you can see that there's a very clear discrepancy. It's really a tale of two economic experiences. So the lower wage earners, they're suffering the majority of the job losses, and they've also only had the least amount of recovery. So it's a pretty big discrepancy if you're earning $18 an hour or less as far as your job losses. So going back to our last market update, it is in fact a K-shaped recovery that we're seeing. You've got insulated industries as well as impacted industries. And this brings us to the National Association of Realtors study. So every year they do a study, a profile of home buyers and sellers, and there's a couple stats I want to bring to your attention. The first is really talking about sellers' actual tenure in their home. So of the sellers who sold, those who lived in condos were living there for 6 years before they sold, those who were living in townhomes sold after 7 years, and those who are in detached homes sold after 11 years. If we take a look at the time on the market, as it relates to sold price versus list price ratios, it holds true as always, even in this strong seller's market that we're seeing, that the longer you're on the market, the less money that you're going to make. So the key is to basically get it under contract as quickly as possible by making sure it's priced correctly, doing all the marketing, advertising, everything like that. And if you want to be a seller 2.0 and really take it to the next level, you're going to need a real estate agent that knows how to use time on the market to negotiate to get you more money in addition to all the other stuff. That's what we do for our clients, and that's what our track record says that we do. If we take a look at the buyer's expected tenure in the home, before COVID hit, they were expecting they're only going to be there for 15 years. After COVID, it's actually dropped by about 10 years. So this could be a situation where they're like, look, I need to get out of my current living arrangement. I need to buy something just temporarily, and I'm willing to move again as time goes on. If we take a look at the overall percentage of home buyers as they're made up by first-time home buyers, you can see that from 2008 to 2010, when they rolled out the stimulus, the government stimulus, that led to all-time highs of first-time home buyers. If we take a look at where we are today, we're at all-time lows. And this is likely due to low inventory as well as climbing prices, but it's also likely due to first-time home buyers having less cash available for their purchase. So in a multiple offer situation, they're not likely to have enough money to pay their closing costs or to pay above appraisal. So this is probably why they're falling out of the market compared to other buyers. Just a couple other quick facts. Buyer's median price before COVID was $270. After COVID, it was $339. This is probably showing a willingness for buyers to pay more for better living, as well as having higher affordability because the interest rates have fallen pretty low. Seller's median sold price before COVID was $271. After COVID, it was $300,000. This is likely due to natural appreciation due to the ultra low inventory that we're seeing. And then for sale by owners, only 8% of total sales were for sale by owner, of which half of them, the buyers and the sellers, already knew each other. And if you take a look at the sold price, for sale by owners, median sold price was $218,000 versus $242,000 with an agent-assisted sale. This is likely reflecting either the family and friends discount or that for sale by owner leaving money on the table because they're not attracting the most amount of buyers that are out there or not having the skill to negotiate and get the most amount of money for their property. So now let's dive in as far as what's happening in the Baltimore metro as well as the DC metro area, the areas that we cover. So when we take a look at the months of inventory, if you remember, 6 months, above 6 months is considered more of a buyer's market, below is considered more of a seller's market. Whereas Baltimore started out with the gap, there was a discrepancy between the Baltimore market compared to DC, that has closed. And both markets, there's really not much lower that either market can go. If we take a look at the total number of the months of inventory just change year over year, you can see that DC has been declining and now it's starting to return to 0%. This was like equilibrium. So it's almost like you can't go any further than where it is right now. You will start to see that trend happen for Baltimore as well. It will bottom out and then start returning back to 0%. Number of new listings. So from March to about June, we see that there was a COVID-related shortage in the supply. From June to December, that supply has been getting filled, but because the demand is higher, it's still keeping the market hyper competitive. When we take a look at Baltimore, same trend. March to June, there was a decline in the supply of homes, but from June to December, it's been a much smaller fulfilling of supply. So that's why Baltimore is probably going to continue to tighten in and continue to remain more of a seller's market because there isn't enough supply coming on. Median sold prices in both metro areas have been rising. That's no surprise. And if we take a look at the price change, around July, you start seeing the price appreciation going through the roof compared to previous years or previous month's price appreciation. So I hope this has been helpful for you. We covered the entire Baltimore to DC corridor. If there are any areas that we don't cover, we know the best agents across the country and we'll be in the co-pilot seat so that we can still be a resource to you. And as always, if there's anything you need, just ask me any questions. Feel free to reach out. But I just want to say, continue to mask up. When it's your turn to get your vaccine, get your vaccine. Continue to stay safe and be considerate of one another. And we are almost past this.